You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That's rockin' tune means it's time once again for a little program we like to call around here, the old Options Insider Studios. I like to call it the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know how to get at us by now. No shortage of ways for you guys to do just that via the website, theoptionsinsider.com, from whence all of our content flows. The written stuff, the social, of course, the radio, it's all there. And you can check it out at your leisure whenever you want to head on over there. Of course, you also have the newsletter. You can sign up for that. I don't mention that too much on the show here, but you can sign it up. It goes out to quite a few of you every week, kind of filling you in on the latest developments in the world of options. We have a lot of our conference stuff popping up in that newsletter this week as well. So check it out. Sign up for it if you haven't done so already. It comes out every Monday morning, filling you in on the latest developments in the world of options. We plan to add more to that newsletter offering. So if you like that kind of stuff, don't worry. We're going to have you covered quite soon. You guys can usually listen live as well. I'm getting some sporadic reports of some issues with the Mixlr desktop version. So if you use that to listen to the show, chances are you may have a problem listening to us today on checking the app and everything else, and that seems to be working just fine. So if you're using that version on the app, you should be good. But if you're many people who come in via the desktop version, clicking on that link via social, you may be having issues. If you are, let us know. We can't really fix it, but we can try to route it to the people who can over there at Mixlr. And, of course, you can always get us the old-fashioned way via iTunes or TuneIn or Stitcher via our mobile app, available for iOS, Android, and the ever-popular Fire OS. And however you listen, after the fact, live, however you get it, make sure you hit us up. Those questions, those comments, you guys really are the lifeblood of the old show. And joining me on the old program today, let's go in order. I'm just going to stick my finger in the air wherever it comes down on first. It comes down first on the Pickle Master, a.k.a. Uncle Mike, a.k.a. Mike Tussaw from RCM Wealth Advisors, joining us from the pickle capital / water garden / boat dock capital of the world, known as St. Charles, Illinois. Uncle Mike, welcome back to the program, sir.
Always good to be here, but we've never claimed boat docks. We do have them, but we never claim them because we can only put in temporary docks because we're on a river, so we have to take our docks out. So they're nice docks, of course, but they're usually just like a roll-a-dock or something like that, or a floating dock. Nothing too special in the dock department.
There you go, roll-a-dock capital of the world. I misspoke. I shall amend that in the show notes forthwith, sir. Meanwhile, let's move across the country to the part of the world where they usually can put in real docks, unless the tide is turning against them. Yes, I'm talking about the coast of Maine, where we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the Option Block program to you as well, sir.
It is a grand time to be here. And speaking of pickles, I had deep fried pickles this weekend. They were quite tasty, actually. But I did not ask the origin of the pickle. I did not ask the city of origin of that particular pickle.
You didn't say, excuse me, is this a St. Charles pickle? Otherwise, I'm out. You didn't say that?
The next time I go, I'm going to say, is this a St. Charles pickle? And I wonder what kind of expression I'm going to get from the Waitron unit that is serving us the pickles.
And
probably one of surprise.
If they take immediate umbrage and slap you in the face and turn around and refuse to serve you, you know they know what you're talking about. Because then they know, too, that the St. Charles Pickle Capital is a lie. But let's keep on rolling before we get the umbrage going, because it's time to kick off the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Still keeping my eyes glued on this Mixler thing. Looks like some of you are able to make it through. I'm guessing it's from the mobile versions. I haven't had any luck on the desktop version myself as well. So we'll keep an eye on that as the show unfolds. Meanwhile, you can always get us the old-fashioned way after the fact, like we said. We know you hardcores like to get it live. We'll see what we can get going for you guys. Meanwhile, we'll keep on rolling. Interesting day on the old street. Another day of the fears, the unrest over Trump special counsel / impeachment fears / all the other things that sold off the market last week and sent the VIX rocketing north to, I believe, its number 7th highest up day or biggest up day, single up day in the history of the product. Certainly well into the top 10, maybe number 8, somewhere in that 7 or 8 range. I know it's very contentious depending on who you talk to where it falls on that list, but a very, very active day. Then ever since then, we've had pretty much mild to decent rallies on the street, and most of that vol, most of that fear coming off in the broad market, have that narrative playing out yet again today. Most of the major indices well into the green. S&P up about 0.6%. Dow, the laggard today, only up about 0.5%, and the Qs leading the charge up nearly a full percentage point. All that green on the screen means red for ye old VIX cash, shy of the 11 handle. So how quickly vol giveth and how quickly vol taketh away. We were actually, let's see, about 1092, and the intraday low, let's see how low did that VIX limbo pole get today? About 1089, so closing right near those lows on the day there. So always a good sign for the vol bulls out there, closing near the lows. I'm looking at what we were picking this past week for vol views, and actually it's looking pretty good for me. I was saying about 1075. Mr. Russell was in the 12s, and he thought I was a crazy man for going shy of 11. But we do have, indeed, the holiday weekend coming up, so if we can stay in this range, I'm looking pretty good, shall we say, for the old crystal ball. But that's another program and another segment entirely. Let's get rolling with this one. A lot to digest here today. Perhaps, Mr. Rock Lobster, we shall start with you. What was catching your eye in this endless tumult of VIX? They gotta have it. Oh, we don't want it anymore. It's burning our hands. We have to sell it so quickly. What was catching your eye out there today, sir?
There are some burnt fingers today. Burnt fingers.
Kind of hard to hold on to that hot, slippery, greased pig known as VIX these days.
Oh my gosh! I was just looking at a lot of the vol products. SVXY is a short vol. If you buy it, you're short vol essentially. Right before Trumpocalypse, one was 159.79. I think that's a product high. And 2 days later, it was trading 127 after hours. That's a pretty good size. Again, the lower VIX goes, the more volatile those products will become if VIX starts to move, because the percentage moves get magnified. And right now, it's making its way back. Real simple. What is keeping things going? Tech. My beloved Qs. The technology keeps rolling. And I'm thinking in our chat room, we're trying to come up with a inverse correlation index to Trump tweeting. I think the less he tweets now, the more we're going to rally, because no tweeting is not chaos. It's not uncertainty. And that's what the market likes. And right now the market likes tech. It likes NVIDIA. It has liked Apple to all-time highs. It's loving Amazon to almost, I think it made an all-time high today. If it didn't cross, where is it? Yeah, 970, all-time high. Facebook close to all-time highs. I believe Google or Alphabet. I can never say Alphabet. Now I'll never be able to say it. I believe that's very close again to all-time highs. So the Q stocks keep powering the market on. Banks made just only a slight recovery, so they're nowhere near their highs. And I think that's a sort of things are waiting to happen on that score as far as will tax reform come, will rates go up? There's been enough there's been enough sand thrown in all of that story to kind of mess things up, at least short term. But the market can forget stuff really fast. And the 10 handle in VIX, by the way, is just for, that's still an extremely low number for VIX. And it's reflective of realized vol and realized vol. I know Schlesinger's going to go nuts, but to me, it's not a perfect indicator, but it is reflective of expectation of volatility. And it's also got to be reflective of current, realized vol, even though it's a 30-day indicator. So, we had a 16 VIX print after hours only last week, and today it's trading 1092, and the dead low is 962, which is a multi-year low. So at least as of right now, I would say the market has gone back to discounting all of this stuff, and it's as amazing as it is. It's all the news, as long as it's not fueled by the White House, it's gone away. It goes away, and we're looking at lower vol. I'm seeing vol in the 6 handle again, which is, I didn't think I'd see weekly vol in the 6 handle until we got some more resolution out of all this, but the market apparently has resolved it. And they say, we don't care again. We don't care.
What they do care about, what you mentioned before, though, is NVIDIA. We don't talk about that enough on the program here. NVIDIA has kind of just been the stealth story of the better part of the last year. So I recall we were talking about it. It was over a year ago. It was the beginning of last year, literally the beginning. It was right around, I think, CES of 2016, which is, of course, the Consumer Electronics Show. And we were joking about it on the network then. And then, NVIDIA was trading around $20-odd, I think, at that time. And, about 30 then. And it seems like all of a sudden, collectively, the market awakened to the possibilities there of the mobile chips for NVIDIA, and it's just kind of been on a tear ever since. It's up over 4x since that period. I said it was trading around $30 at about nearly 140 today, up another over 2% again today. So NVIDIA has just been, you're right, it's been kind of we talk the Apples and the Facebooks and the Goog/Alphabets, all the ones that get all the headlines, but NVIDIA has been a great deal over the past year and a half or so. A 4x return, you can't really scoff at that. And again, contributing to that upside again today, up 2.25%. This is the name that's been averaging about nearly 150,000 contracts a day, about 147. Today doing 161. So yet another active day out there in NVIDIA. We don't talk about it a lot, Mr. Rock Lobster, but do you hardcores, the crazies over there in the pitch chat, do they sling some NVIDIA? Is this one on their radar?
We have a lot of clients that like it, that sling it, been selling puts in it with huge success. Also, we looked at actually reverse Iron Condors in there after the earnings, buying the guts and selling the wings, kind of condors, because of just the nature of the moves after earnings the last year. So, and they paid pretty well. So it's things that I think the implied vol is a little higher now. The stock's up 38%. I think it was trading $100 but less than a month ago. But yes, so I think they used to make really fast chips that were all going to be in kids' computers for games, and all of a sudden those those high speed, those ultra high speed GPUs are going to be everywhere, I guess. So it looks like they have a very bright future, and it's the old story, earnings growth, fundamental story. They're just selling lots of stuff, and they're blowing all the estimates out of the water, and they're just growing. So they're in an industry right now, like if you just say self-driving, mobile car, anything remotely related to it, I think Intel scooped up Mobileye maybe as direct, to help compete with NVIDIA's growth there. It's certainly where the future's going. So hold on tight.
Hold on tight. Getting the love for NVIDIA over there in the pit chat. Uncle Mike out there in the hinterlands, the realm known as St. Charles. What are you feeling the love for these days, sir?
Hi ho, silver. In addition to what Andrew said, and I'll touch on that a little bit in a moment, but we had a little bit of a bump today in silver. We came down a bunch, but over the course of the last week or so, it has come up rather rapidly. We're up almost $1 in it from around I believe the low is in the low 15s, and now we're at 1623. I'm quoting SLV, of course. So we're getting a little bit of a bump in the commodity realm. Oil was not that high today, or was not that much of a mover today. Same with XLE. I think XLE was down a few pennies. Oil was up a few pennies, so not a lot of movement there. But to kind of add to what Andrew was saying in this lower volatility world with which we now live, I've actually gone back to diagonal spreads again. I couldn't resist it. I mean, I prefer to just do verticals on dips in terms of selling put spreads, but I just can't resist it anymore. So I actually bought some August calls on SPY, around a 70 delta, the 232 calls. And then I sold. Question often comes up, what do we do in markets like this to sell some premium? I actually sold a 239 half call when the market was right at around 239 half. And then I simultaneously bought 240 half call, and this would be for this Friday. So I took in roughly I think it was a 48-cent credit on it. And the concept behind it is that if the market does stay the same, then I do have that premium that is working in my favor. If the market goes down, of course, we also have that. But what I like about it is if we do have some type of insane movement of some sort, let's say SPY is up at 246, 247, something like that over the course of the next month or so, then by using a call spread instead of just a straight call option, we have that in place. So in other words, yes, we're paying more, or I'm sorry, we're not quite getting the same credit as if we were to just sell a call against the longer term call, setting up a covered call simulation, but we still get a little bit of credit on it. We still have time working in our favor, so to speak, and we have some type of an upside buffer. So that's where we're at right now in terms of how we're playing the downside, or the lower, what we deem at least as the VIX at the lower end of the spectrum, and how we'll be going, at least for the next couple months anyway.
All the love. People are going to keep asking us, so we should. I know you mentioned the diagonals there. No crazy things to report in the silver collar realm, I'm guessing.
No, nothing crazy there. If we do continue to increase, but there will be something, but I'm thinking we'll need probably another $1 of increase in silver. So if SLV crosses the 17 threshold, then I think we may have a pretty interesting strategy block with what I have in mind.
Are you still loving that 2-year time frame? Are you still committed to that, or have you thought about maybe adjusting that maybe and the duration of it?
Possibly. It's one of those things to where we still have the original 2-year in place for the longer term collar, and I have a shorter term collar in place out in this coming January. But for now, I'm just going to sit on it, and when we're past the 17 mark, or I look at these every day, but my estimation is when we're past the 17 mark, there's going to be a lot of choices to make in a good way, meaning we'll have hopefully a little bit higher volatility in silver, so premiums will be higher. We'll have obviously a higher price in silver, so we can sell calls at a higher level or possibly roll up the long put it for a better price. So I'm not married to the 2-year time frame if we can make it shorter and it becomes more beneficial. The thing with which I am concerned with is that I don't want to sell a covered call too close on silver because of the fact that silver is one of those underlyings that could go up 25% in a day and go right back down, of course, but I don't want to necessarily cap the upside unless it's something very beneficial, meaning by selling a 25 call like we had, if it goes to 25 from where we were, I can somehow find a way to sleep with just a 60% profit. So, but I'm not going to make it too close of a duration if it hinders on too much of the profit.
I got you. Just I know a lot of our listeners want to know what's up with that collar, so I like to drag it out of you whenever possible. Now, though, let's keep on rolling. It's time for some of the hot, the crazy, the weird options activity that came across our tape today. It's time for the Odd
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for The Odd Block.
All right, everybody, welcome to The Odd Block, the portion of the show where we break down the weird, the wild, the wonder, easy for me to say, the wonderful, the whimsical, the just downright head-scratching paper that is lighting up our collective options tapes today. We're going to get back to, this guy is kind of a frequent offender of late. If you recall, just last Thursday, actually, we were breaking down some weird activity in this name. This is, of course, Pandora, excuse me, ticker symbol P, closing today about $9.12, off about 1%. So they're kind of giving up, some of their recent upside. Last time we talked about them, they were flirting with about 9.70. So they're off quite a bit since then, about 70 odd cents. When you're a $9 stock, it's quite a bit. And of course, last week we talked about, looks like paper trading a bunch of stuff for size in the distance out there in the Jan 2018 15 calls. Looks like paper sold a bunch of those for about 25 cents, 33,000 times and change. Today, getting more. This one really is a head scratcher. I'm trying to think, Mr. Rock Lobster, and all the long time that I've been doing this, all the time that you've been doing this on this show with me. I'm trying to think of the last time I saw someone opening in such just a galling fashion as this. But that appears to be exactly what we got here. Out here in Pandora, like I said, ticker symbol P, closing $9 and change today, about $9.12. This is the name that does about 33,000 contracts a day, doing 80,000 today, and a good little chunk of those coming in the straight good old May 11 halves. These are expiring on the 26th, so the weeklies, not the monthlies. 11 half calls, so decent upside. Paper coming in and just straight up blasting away. There's no other real way you can describe this. Huge block of 6,000 going up over there on bats for a penny. Yes, that's right, a penny. Someone coming in and blasting away on these bad boys for a whopping penny. Now, before you say to me, well, Mark, there clearly must be 8,000 to 10,000 open interest on this strike because this guy's got along and he's just getting the heck out of Dodge, giving up the ghost. He's just wiping them off his books. Well, you might be forgiven for assuming that. That was my assumption as well when I first saw this. Then I dug into the open interest, and actually there are 72 contracts open. So this appears to be an opening seller of a total of nearly 6,500 on the day for a penny. Yes, a penny. They're still offered at a penny. So listeners, if you want some of these bad boys, you too can get them all you want for a penny. These are about $2 and change, about $2.30 odd cents out of the money calls. They don't have too long to run. They only have a week. So this is someone clearly thinking these probably aren't coming due, but this one is just all kinds of weird, gross. I mean, call it what you will. I want to go hope against hope that this guy was really buying these somehow. I mean, not that that's much better. He could have gotten the 11s for around that same price if he squeezed it a little bit. But still, this one just, good thing the Viceroy's not here because this would just set his mind to exploding. Opening 6,000 times for a penny. I don't know, Mr. Rock Lobster, in your life, in your trading career, have you ever needed $6,000 that badly?
I haven't needed $6,000 that badly, but I guess somebody does. This was the most head-scratching penny. You know, I mean, Pandora has some volatility. It is definitely, right now, it's like close to, it's year lows. Like I said, we've highlighted, I think, a lot of exiting paper. But 6,000 calls for, it's almost like somebody got a penny bid or penny offer gamed, or somehow they gamed the system. I don't know, because it traded on bats, so maybe there's some weird maker-taker shenanigans going on. I don't know, and they're still offered at a penny if you want them. So somebody got a hot idea to buy these for a penny. And I'm looking at, there's some other volume on the May 9 puts, and I'm not sure in how they fit, because the time was around there, but it didn't make a whole lot of sense. Are they buying the May 9 puts and buying stock? It's kind of was hard to figure all this out, to be honest. But it did not go up on the same exchange. They went up within about 20 minutes of each other. So again, just really, really, really odd paper. Other trades did go up. Pretty good sized trades, like June 11, the June 11-14 spread went up. So it could be related to that, but they all kind of went up on different floors. Somebody, you know what it is? Somebody's just playing a chess game we don't get, Mr. Longo. I think that's ultimately somebody tried to do something really tricky. And
your point about
I would hope so, with something like that.
Even Uncle Mike, he felt so much umbrage. I knew this one would offend you, Uncle Mike. This has to offend.
I was speechless, but now I can't stay silent anymore. Yeah, I'm hoping it's some type of weird game, like you said, a chess game with which we are not aware. That's what my hope is for this trade, quite honestly.
Your point about bats is a good one. I did note that it went up on bats. That seemed kind of odd for this paper to go up on bats. And the more I think about it, there is a lot of make-take gaming going on over there in terms of people opening to collect rebates. If you're not familiar, listeners, there's all different types of models of execution in the option space. There's taker-maker, there's maker-taker, there's all sorts of other variations in between. In the maker-taker, if you're making liquidity as in putting orders up, then you are getting a rebate. If you're taking liquidity, coming in, lifting an offer, or hitting a bid, then you are paying a rebate. It could be possible this guy's coming in, and by posting this penny offer, maybe it was at 2 cents, he posted it at a penny. Maybe he got someone to facilitate. This stuff is still gross, but there are rebates floating around of upwards of 40 cents or more sometimes. So maybe he found a way to take this $6,000, put on some risk, and in the process, collect 40 cents a contract, which would be interesting and gross in a different way. A little bit better profit potential there, but still all sorts of crazy. Let us know what you think about this one. I do like, this does have the whiff of some sort of weird make-take gaming going on here. That's the first thing I noticed when I saw that. I was like, oh, bats. We know how many times do we see bats on this one very often? We see Amex, we see Philly a lot, we see SIBO, a lot of the floors where they can execute this stuff. Don't see bats as often. So when they pop, that was the first thing I noticed, and the second thing I thought after this penny thing, and then we're talking about it here today, was, of course, the fees. All about the fees at the end of the day, listeners. That's the world we live in these days. Can't do any paper unless you're getting fees for it. All right, moving on to, this might be, if not a newcomer, one we haven't talked about in quite some time. But this is Energy Transfer Equity. Ticker symbol ET. ETE. Closing today, $18.47, off about nearly 1%, so not the best day for good old ET, or ETE, or call it what you will. This is the name that does nearly 12,000 contracts a day, so decent paper for an odd block candidate. Today, doing about 42,000, so pretty aggressive. And about 20-1 calls over puts. And listeners, if you're wondering where our eye of Sauron was drawn, yes, it was drawn a little bit farther out this time. There are weeklies in good old ETE, and it was drawn all the way out to the June 20s. So not playing weeklies for a penny this time, going at least a little bit farther out down the chain, about a month. We got the June 20s lighting it up for the tune of paper blasting out one block to start the day over there on Amex, 20,000 times. It looks like paper selling, like we said, for 20 cents. Actually, it was a print for 21 going up earlier before that 20,000 lot went up. A total of about 30,000 went up on the day, so multiple blocks went up on this strike. And this one, unlike the other, has some size open interest to the tune of about 42,000 contracts open here. So this appears to be, as it looks on the surface, someone giving up the ghost on this 20 strike. It's kind of hard to blame them. You see here the stock heading south today, still hovering around 18.5. You only got about a month to go in these bad boys. Our friend here decided, 20 cents better than zero. I'll take what I can get right now. His timing seems to be opportune because these things are now 14 at 18. So if he had waited any longer, this erosion would have continued in his face. Again, no, can't be for sure here on this one, but it does have all the inklings of someone deciding, let's get the heck out of Dodge while there still is a bid to be hit on these bad boys. Looking back at the year that's been in good old ETE, got as low as down, flirting with the 10, got into the 10 handle, actually got about 10 half or so back in May of last year, actually almost exactly a year ago. And ever since then, it's kind of been flip-flopping, got as high as nearly 20, then sold off back down to about 14, and then it's kind of been flirting in this 19 to about 17 range or so for the better part of the last 6 months. Our friend here was clearly hoping for a breakout. Doesn't seem like that's coming to pass, and he's deciding to get the heck out of Dodge. Mr. Rock Lobster, run with this second one here. What's your take? You think our friend is just giving up the ghost, or you think this is perhaps additive paper?
I'm of the mind this is additive paper, mostly because it's in that sweet spot of percentage. Like it's around 1% of the underlying. It's a little more than that, 20 cents. So it kind of has that smell, that buy righty smell on all these, limited partnership underlyings. So I'm thinking they're just kind of hitting the strike on this one. As far as I can tell, normally the paper is sort of, the flow of it was very crush. I mean, these calls were a little more bid, and then they got kind of slaughtered today. So that's what this particular paper looks like to me. The timing's sort of right. So it's well outside of the dividend stream, and they're even lower as we speak. So if somebody bought those things for them to rally, that's a hard rally on a limited partnership stock. They're not, well, until the oil crisis, they weren't the biggest movers around. So I was trying to find the purchase or the trade on these, and I was having a hard time finding the entry point. So that basically is my answer to that one. I see it as probably a sale of some sort, and they just kind of keep selling them and hope to make some bucks on it at some point.
Interesting. So you're not thinking they're closing out along. You're thinking they're going the more higher probability route of just blasting out, taking their 20 cents and running.
I'm thinking that. Of course, it could be totally wrong, and I'm sure Henry will come in and say, "You're a fool. You're an idiot. I know these are closing."
You're lucky the desktop link doesn't appear to be working. He would be doing just that now.
I'm sure he would.
I don't think he's on mobile.
But I think that is what that's what the paper feels like. They just keep blasting away at the strike. But I didn't find the opening side without really knowing exactly the opening side. Either way, they're not looking like 20 is a big, that was kind of a recent high, and they're just not. They're comfortable with the fact it's probably not going to go up there in the short term.
I agree with you. I'm just gonna tweet out your questioning of the Flow Master, see if we can rope him into the fold here today. You've invoked him, so now I'll see if I could bring him into the fold there. All right, that's easily done. There we go. All right, and now let's keep on rolling with our final name, our final victim here on the old odd block. Magum, am I pronouncing that correctly, Mr. Rocklaps? I'm not familiar with this name. Of course, I'm teasing. This is MGM Resorts International. Ticker symbol, appropriately enough, MGM. Closing today, about 31.5, up about 30 cents, about 1%. So not a bad day here for good old MGM. Closing today, like I said, 31 and change. This is the name that does about 21, nearly 22,000 contracts a day. So pretty active name for an odd block candidate. Today, doing about 60,000, almost 3x that today. About 9-1 calls over puts. And if that gives you an inkling, it shouldn't. Well, actually, it should, because it was on the call side this time. So guess it should. Let's keep it that way. Let's roll on out to June, where we find our activity. And if you were saying to yourself this week, it's been a while since I've seen some good stupids. Easy for me to say today. It's been a while since I've seen some good stupids go up. I need a nice stupid discussion on the old odd block today. Well, we got you covered here in good old MGM. Maybe Uncle Mike Tusaw was floating around some MGM today. We'll have to ask him. But it was size stupid territory to the tune of the SEP 35, 36s going up. Paper buy-in, about 20,000 of each. So you got a nice 40,000 lot stupid. If you're wondering if any size money is the stupid money, Here is indeed living proof of just such a thing. Buying the 35s 20,000 times for 87 cents. Buying the 36s 20,000 times for 64 cents. Going up in 2 blocks over there on the Amex. No fee arbit on the bats this time. Straight up on Amex. Excuse me. Looks like, again, buying straight up stupid. We did see some similar buys a few weeks ago out there in MGM, so calls have been popular out here of late. This name has been looking pretty good. Actually, really no size open interest to speak of. Only about 2,700 on the 35s and nothing on the 36s. So clearly opening additive paper. Someone deciding they like some upside here in the 34s, or excuse me, 35s, but they couldn't get enough of them, or they just decided they really wanted that 35 half strike. And so they're just going to buy both and try to trade on some splits. Either way, interesting to see size stupid going up in MGM. Looking back at the year that has been out here in MGM, about a year ago, this thing was flirting at much lower levels, about 21 and change. So it's up about 10 handles from there. It's been a nice upward story. It's no 4X like we saw in NVIDIA over a similar time frame, but still not bad. Can't complain. About a 50% or close to it rally out here in good old MGM. And of late, like we said, the call buyers have been loving it because it was trading 27 a few weeks ago and now up to 31.5. So a nice $4.50 rally out there. Hence, perhaps all of this call love, as stupid as it might have been. First off, before we go to the Rock Lobster, Mr. Uncle Mike, I know that awoke you from your slumber. Were you perchance slinging any MGM today?
Unfortunately, I was not, but I always enjoy a good stupid conversation because right now Mark's about to say how much he doesn't like stupids, but then he's going to talk about how he actually really does like them.
I don't think those words will ever pass my lips, but I don't like them on the outset. You know my feelings on this issue, sir. And if you are like me, if you hate stupids, think the name is appropriate, write in. Send us your feelings on this issue. Mr. Rock Lobster, take us home, sir, before Uncle Mike and I descend into fisticuffs over this contentious matter. What say you, sir, on the matter of size stupids in MGM?
Well, do you remember the last time we talked about stupids in MGM? Again, I'm trying to draw Henry out again.
You're just playing with fire here today, sir.
They were those longer term ones, and this was, these are dime wide markets, and the paper just lifting the offer in this stuff. So I can't quite explain what I think is going on, but there has been, obviously, this is bullish paper. I got to look harder to see if there is some stock. It wasn't flag tied to stock. But what's curious is why, is this a China play? Is this gambling in Asia play somehow? Because that has driven a lot of the volume on a lot of these names for the last couple of years, just the growth in China and all that kind of stuff. So it's kind of it's a bull market when people are buying upside calls. And that's, after a pretty good move in MGM, they're looking for, that's still 20% out of the money calls in September. That's not a small thing. And if the customer was selling things on the offer, which Mr. Longo, usually didn't happen back then, I would find this interesting to say the least, but it does look like some pretty seriously bullish paper.
Yeah, this is somebody who wanted so much he couldn't get it all on one strike, so he had to split his love, hence the use of the stupids. I will be charitable and assume that is his rationale behind doing this and not some of the other things that I have questioned openly many times on this program in the past. Aptly named. That's all I'm going to say about that strategy. Very, very aptly named. All right, let's keep on rolling now. It's Monday. It means it's time for you guys to weigh in with your questions, your comments. Those of you who could fight through all the Mixler noise and nonsense we got going on today, you can hit us up live as well. It's time, yes, once again, for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. Like the man said, welcome to the portion of the show where the inmates run the asylum. No, I'm not talking about the Rock Lobster. I'm talking about you guys with your questions, your comments, your insights, your pearls of wisdom, your sometimes just banal missives on life. We welcome all of them here on the Old Mail blog. We read them all, don't always answer them all on the show, but we try to answer them offline if we don't get to them here. And let's kick things off. We ask you guys questions every now and then on this segment, too. Last week we asked you guys, hey, what still earnings season, still popping off last week. Which of these big names was on your options watch list? We gave you Walmart, Alibaba, Home Depot, and Cisco. And as we reported at the end of last week, Alibaba was kind of running away with that one. Nearly half of the vote, about 48%, coming in on Baba Land. Only 25% for Cisco, and the rest 18% Home Depot. Only 9% feeling the love for Walmart. I know Walmart isn't always the sexiest of names. We don't talk about it a lot on a show like this, but I thought I'd get a little bit more love around earnings time than it did. Moving on to this week's question, just showing you how high the vol of vol is these days. When we wrote this question not that long ago, probably about an hour and change ago, VIX cash hovering right around 1120. As we said, it ended the day shy of the 11 handle, right about 1092, 1093. And we said at the time, VIX was around 1120. The June Future, right around 1240, just to give you a little bit of context of what's going on out there. At the time, the weekly puts, so expiring this week, 11 puts were trading about 15 cents. The 13 calls also trading right around 15 cents. So we said, pick your poison. What's your trade of that info we gave you there? Do you want to buy the 13 call for 15 cents? Do you want to buy that 11 put for 15 cents? Or would you rather sell the 13 call for 15 cents or sell the 11 put for 15 cents? Notice there's only 4 options there. We didn't want to get into combos of iron flies or strangles or anything like that. We kind of made it very straightforward, very bare bones. Do you want to buy the call? You want to sell it? You want to buy the put? You want to sell it? Let's start with Mr. Uncle Mike. Let's drag him back in here. I know he's all fired up after that stupid talk. Mr. Uncle Mike, what is your pick? And then what do you think is winning our little contest here?
Well, since I'm not able to buy the 13, the 14, and the 15 call all at the same time, I'm just going to go with buy the call, and I'm going to think our audience is doing the same.
Interesting. I see how you work the stupid in there. Don't think I overlooked that. I hear all things. I just choose to comment selectively on occasion here. Mr. Rock Lobster, same question for you. What are you feeling out there, and what do you think our folks are feeling?
I think just buy the call. I'm just going with simple lately on these polls. Simple. So I don't know. I guess I would like to argue with two some more, but sometimes it's hard to.
That's why we got to team up and argue with Mark.
Bring it.
I like it.
Bring it. Come at me, bro. What did that guy say? Something like that. Come at me, both of you. I can take it. I'm in the big chair for a reason here. All right. So you guys actually are on your game this week. It's like you've been playing, or maybe you've been cheating looking at the actual show notes. Because buy the 13 call is winning with the majority, about 42% coming in for that one. Then it's a tie between buying the 11 put for 15 cents and selling the call for 15 cents. Both of them have about 23%. Only 12% coming in for. I thought the selling the put would get a little bit more juice than it has, just because that's become a fairly popular strategy out there in VIX land of late. I guess the fact that it's not maybe tells you how quickly VIX can be retraced into the downside here, which is kind of interesting in and of itself. Again, that just went live about an hour and change ago, so we got the rest of the week for you guys to weigh in. I'm sure VIX will be moving all over the place throughout the week, so very quickly that 1120 number will be crazy, and all sorts of other things will happen that will be fun. But weigh in if you haven't over there at Options. Let us know what you guys think. Let's see what else. We got a bunch here. Let's start with our old friend here, Game Daydog, popping back in. You remember him, listeners. He's the one who had that put spread that went kind of bad question, even though it didn't really go bad. It seemed like it did, and it scared the heck out of him, and it scared the heck out of a lot of you guys, too. You guys wrote in with subsequent questions. He wrote in saying, woohoo! He actually is writing in because he made the boot camp show. We talked about that question on boot camp as well. Again, boot camp, not as frequent as this one, so sometimes we got to work the questions onto here. Otherwise, people got to wait for months for their answer, and I feel bad. He said he's made the boot camp show. Well, there you go. You can now die a happy man. He's right. I did take I think a bruise. I think he meant to write that. My position was good. The stop gap through my position. Is there an option strategy that offers the most gap through protection. Well, that one is kind of, if you recall his situation, listeners, I believe it was Lululemon. He was short, I think a 60, 61 put spread, something like that. And if you remember, Lulu last few months hasn't looked too good. It gapped right down through his strike. He was short, I think short the 61 puts, long the 60, something like that. And it gapped down to about into the 50. So well past, and he got assigned on some of his puts, and it was a little bit of a scary moment for him. But it worked out. He was fine. If you keep the spread on, keep everything intact, it all works out as you intended, even though it looks kind of scary with this extra stock balance. About the flip side of that, what is the strategy that would be useful in that scenario? Well, in those gap scenarios, which is kind of the one risk scenario everyone brings up when they try to argue against things like selling puts or selling any real option premium type strategy, the risk everyone really comes back concerned about is, of course, exactly what you're talking about here, this gap down, this gap risk type thing. So the strategy that's best poised for that, I think you can probably guess, is the flipping of that script. If you come in just straight up bought that put, nothing else involved, if you just bought some premium, gapping is not really your fear. In fact, you're happy. You're excited to have a gap, because a gap is exactly what you need for the long premium type position to pay off. If things move slowly and gently in your direction, guess what? Time decay is going to eat you alive before you even get to where you need to make your money. Where if you get a nice gap in your direction, you're a happy camper. So yeah, sometimes keep it simple, stupid works. And in this case, if you had just bought a put, I'm not saying you should have done that, but if you had just bought a put, if you're worried about these things like gapping, anything long premium is good, even though in your scenario you were covered, you had a spread, you were good. So I don't want to scare you away from doing that type of trading. But in that scenario, the long put can certainly work. Mr. Rock Lobster, anything else you want to advocate for our friend here, Mr. Game Daydog, who had that, shall we say, scary experience with the gap and through of his put spread, and now he's wondering, what can he do to prevent these types of gaps and perhaps take advantage of them in the future?
I think, there's nothing you can do. If you're going to sell premium, a gap is reality. What I do is, and we do in our chat room and a lot of our education, is we try to do premium theta positive positions, but contract positive positions. So you're trying to generate theta, but also have a few extra long contracts. That way, if you have risk, you're going to have less risk. You take risk in other ways, but the gap risk is not there anymore. So depending on pricing, you can set trades up like that.
So you're talking about like the type of unit trades we all used to do on the floor back in the day when we saw the stuff kind of as just units. So in this scenario, if he wanted to stay, I'm just clarifying it for him. So if he wanted to stay, stay short premium, which he doesn't mention, I kind of want the long premium route. But if you want to stay short premium, you're advocating maybe sell some like a ratio, sell 2 at the money, buy 3 out of the money, something like that.
Exactly. And depending on the setup and where you think there's a little edge to put those trades on. But yes, that's the idea. So you can, but the easiest way to have gap through protection is not to be short contracts. You can be long theta, have positive, decay, but just not short contracts and try to, if things go well, you're going to make more money if you just sell spreads, let's say. You'd have to have things work out like almost perfectly to make more money in kind of because you are buying the extra contracts, you're going to have less decay. You almost have to have things work out totally perfectly for that. But again, that's an education. Of course, I'm going to shield my own stuff, but that's an education thing. But it's also risk control.
Uncle Mike, same question for you. Obviously, long put can work. Obviously, these types of ratios, if you are, actually looking for a nice little gap, that's a good way to do it and not actually spend a ton of money. We talk about these all the time. This is still the trade du jour out there in VIX options land. It's usually short 1, long 2 to the upside. It's kind of the opposite of what we're talking about here, but the same principle applies, having some net long units to kick in when you need them. Uncle Mike, any thoughts here for Game Daydog?
Yeah, a little bit of premium is a nice thing to have. And just one example, let's say that the trade that I was talking about at the beginning of the show today, how I sold a call spread instead of just selling a call. If we have a major gap up, if we find the cure for cancer, if something happens tonight, between tonight and tomorrow, then I'm going to be in good shape, because if we do have a major gap up, we have that premium in place for it. There's ways with which you can hedge yourself and be a premium seller. Of course, that's the vertical spread. when doing so. The other way would be just to not lever yourself so much. But Andrew's right. If you're selling premium, gaps are a very big reality.
All right, let's see. We got time for at least one more here. Let's go to Jlers. I like the handle. He or perhaps she asking a straightforward broker question. You always get variations on the theme. What's the best broker? What's the best broker? He wants to know what's the best broker for a specific strategy. The Iron Condor. Iron Condor, interesting. Obviously, multi-leg strategy. If you're even doing a one lot, it's going to be 4 legs, kind of at the minimum, 4 contracts. So you're talking high contract volume type strategy. So most of the big brokers we talk about have decent execution. So you obviously want to be cognizant of, in this case, you want to be cognizant of the costs involved in that. So you want to look at the ticket charge as well as the per leg commission. I know Uncle Mike has a nice little deal going with IB. Maybe he can talk about that a little bit and how much an Iron Condor will price up there. Obviously, there are other things to be cognizant of as well. Some broker platforms, they facilitate type of trade, make it a lot easier. For example, they'll have pre-populated drop downs, makes it really easy. Bam, Iron Condor, bam, take your strikes, bam, you go good to go. Sometimes they're a pain to execute on certain platforms. That's up to you how much of a factor if you're all just straight cost. But that kind of stuff really bothers me if I'm doing crazy multi-leg stuff and it takes me forever. I have to use some special tab to enter the order and stuff. That drives me crazy. I need some sort of efficiency, streamlining in my process as well. So I like those kinds of brokers. And then you can't go wrong with a lot of the ones we talk about here. Option House is cheap now, E-Trade, whatever they're calling themselves over there these days. Of course, IB is always a good one when it comes down to contracts, and they're very specialized. And of course, as well as, our friends at OX, they have a good platform. The cost, though, might be an issue when you're using them. They're still one of the higher fee brokers out there. Uncle Mike, I'm guessing you're going to lean towards IB in this one. What's it cost to do an Iron Condor with you guys in your special deal?
Well, I mean, I'd actually it depends on how many contracts that you're looking to do. If you're a one-lot Condor trader, I typically steer people more towards TD Ameritrade with our deal. And the reason is that it's 35 cents per contract with no ticket charge. So you can do a 4-legged trade for $1.40. So you can actually, that's if you're doing
that's a nice deal.
Yeah, no ticket charge at all. I mean, we charge a quarterly fee for that privilege. Don't get me wrong, but for most people that are trading lower contract amounts, it's a tremendous savings. Through Interactive Brokers, if you're doing like maybe a 4 or 5 lot, it works out pretty well from a commission standpoint. But 1 lots don't work out quite as well because even through us, there is still the $1 minimum per contract. So Interactive Brokers, even the rack rate, I believe it's 75 cents per contract. Through us, it's 25 cents per contract. You have to pay the exchange fees at Interactive Brokers as well. You do not at TD Ameritrade. They eat that cost. But at Interactive Brokers, they have a $1 minimum. So if you're doing a 4-lot Iron Condor at a 1-lot 4-legged Iron Condor at Interactive Brokers, whether it's through us or through whatever deal you get, even if you're trading such size that you're even bigger than us, then you're probably going to be paying $4 for the trade itself. Whereas through TD Ameritrade, through the deal with which we have there, it comes out to $1.40. So over time, that does add up. So I would typically steer people towards TD Ameritrade in that situation. I think it's the best deal in town, quite frankly.
Yeah, I didn't know you had no ticket charge. That's a pretty good deal. So if you're doing small size like a 1 lot, like Uncle Mike said, which will still be 4 contracts over there on any platform, then no ticket charge is nice. Remember, ticket charge is kind of your upfront fee, kind of your cost of doing business. You got to do that regardless of how many contracts you're doing. So if you're only doing a handful of contracts, no ticket charge. Clearly the way to go. Mr. Rocklobster, any thoughts on this before we keep rolling?
I mean, not really. I think I covered it as far as that. I mean, it's 4 legs. And until 4-legged trades is how those companies make money. So until something magical happens, you just got to find the lowest cost to do it. So, I mean, nothing, outside of just, there's good systems to do it. You want where you could put in the order, cleanly in one piece and, exit in one piece and stuff like that. So I don't have a whole lot more to add on that. I do, obviously we like the Lightspeed works pretty well with the live vol platform because it's easy setting the trade up. But we can get you decent rates there at that price as well if you're an Option Pit Live subscriber. So, but it's all as long it's mostly I think just making sure you can set up the trade, see the credit you're getting, understand how it's going into the market, how it's getting out of the market. Those are the things you want. So.
These kind of questions.
I can't add much to Mr.
Yeah, he did a good job breaking it down. Ticket charge is a big driver. That's kind of hard. These questions always boil down to subjective at the end of the day. Because that's why I like to lean towards cost, because it's a much more straightforward type of analysis. This costs X versus Y. Because otherwise, you get into subjective things like this drop-down menu versus this type of menu versus this type of execution. Those things matter more or less to different people. So at the end of the day, it's kind of hard to weigh those without talking to the person directly. But at least cost. We hate to talk about commissions, but big strategy like this, commissions are kind of a big deal, so that's definitely a big driver. Good, interesting variation on the old what's the best broker question. Now, let's keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, it's a portion of the show where we break down what we're keeping an eye on for the rest of this week of perhaps continual VIX erosion, ? Of course, we do have the big holiday week coming up. I'm rooting for that, just for my own selfish crystal ball pick to come through. Keep me on top of the leaderboard there on volatility views. No other ulterior motives, so don't worry, I swear. But, yeah, we do have that holiday weekend coming up, so something to keep in mind. That said, let's start out in the hinterlands of St. Charles this time. Uncle Mike, what are you watching for the rest of this week, sir?
As always, watching the numbers. We're having a hard time getting through the 2,400 mark on the SPX. We made another upward run today, but we still got 6 points to go until we actually touch it. So taking a look at that really closely and want to see if this silver rally can continue.
There you go. Silver and SPX. I could not have guessed those in a million years if I closed my eyes and tried very hard. All right, and Mr. Rock Lops, take us home. What are you keeping an eye on in this truncated holiday week, sir?
We are looking. Oh, next week is truncated, right? Not this week. You freaked me out there for a second.
Oh, I'm sorry. Was I jumping the gun?
I believe next week is truncated. This week, the vol will start getting crushed to pretend it's truncated. We have FOMC minutes, and I don't think we waited till 58 minutes into the show to mention it.
No, actually, this week is Memorial Day is the 29th, so it is this weekend, sir.
Yeah, but that isn't the day Monday.
Oh, I'm saying they're going to start taking the juice out, and that's what I'm talking. Yeah, next week you're right. Technically, you're right. Next week is the truncated trading week. This is the week of the truncated vol. There you go. Thank you, Uncle Mike.
You can backpedal that one all.
This
you
is
want,
the second.
however.
This is the second time in 2 shows now where simple concepts have completely flummoxed you, sir. What's going on over there in the hinterlands of Maine? You've been hitting the salt water too hard.
Hey, listen. When somebody comes at me with a vertical spread, that's a tough question.
Yeah, that $1 vertical threw you for a complete loop last week, or whatever it was, $2.
It was a $5 vertical with 2 handles of in the money value.
What is this man saying? I can't possibly decipher this question.
It is stuck in my brain now. Unfortunately, it is burned in like the Widowmaker. Anyway, however, FOMC minutes, and VIX is back to wherever it is. It is back into the 10 handle once again. So the market is going back on the not quite knowing what to be afraid of, maybe. And most of whatever the current news is just, as Sebastian would say, although he used another term, we'll call it, they end up being junk burgers, right? They come out, they're really hot, and then they just sort of fizzle into nothing. So if that's what we've got, onward and upward, and I think Mr. Tusaw's 2400 will be, it will be run through soon enough.
Thank you for keeping it family friendly, sir. But yes, let's get out of here, listeners, before we confuse the Rock Lobster even more. But before we go, one last time around the horn, see what each of them is cooking up. Hopefully, Mr. Rock Lobster doesn't have any junk burgers on his grill for us. What are you cooking up over there, Mr. Rock Lobster? I don't want any tasty, or perhaps shall I say, not very tasty junk burgers.
Now, you know my favorite phrase that you use is the masterclass starts tomorrow.
Masterclass. Is it time for the? I'm getting excited just saying it. Is it time for the masterclass?
income producing strategies in the masterclass. That is right. 10 1-hour weekly episodes on selling vol, what to expect selling vol, how to price. We've even busted a couple myths about probability and all that other kind of stuff, and how one might go about trying to make income, which of course is something we're all looking to do.
I like that. The income masterclass. So if you too want to become a master of all things income, head on over optionpit.com. Take a masterclass. You too can hopefully maybe get a nice little certificate out at least at the end of the day, so that could hang that on your wall. If nothing else, I hear it's a very fancy certificate over there. All right, and Mr. Uncle Mike, what is cooking in the hinterlands of St. Charles, sir?
Well, if you are looking for a financial advisor, someone who will be watching your portfolio earnestly as often as humanly possible with a very high BBI, as Mark says, feel free to contact me. Area code 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
Or maybe you're looking to sling some Iron Condors with no ticket charge. Uncle Mike's got you covered. Hit him up over there. You know, all these weird little fun things pop up. You never know. Hit him up. You want to do 4 legs? Uncle Mike's got you covered. No ticket charge. Go for it. Can't beat that. Hit him up over there, m2saw@rcmfs.com. They'll explain all the details and the nuances to you. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. Sorry about the live problems. We'll take the whip to them and see if they can make sure everything works better for you next time. And we'll see you on Thursday for more The Option.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.